Good morning, everyone. It's Chrissy from Solstice ATR. Hope everybody's doing great on a Saturday, enjoying their weekend, and I look forward to seeing you Monday sharp and ready for the market opening on Monday. You can find me at Solstice on Twitter, on Instagram, as well as Discord. You can DM. Remember, this is for illustration use only. We're not a broker dealer. Past performance does not indicate future results. Use at your own risk. And if you want to copy the data, please ask for permission or check our website at Solstice ATR for the disclosure. Let's talk about the shift in the market from this week's price action from Monday throughout Friday. We had a shift on Thursday to the downside. There was a sell-off. Then on Friday, we had a rally. So what I want people to understand, we're going to look at the past performance and what we hold in our portfolios. We are already asset allocated according to our risk tolerance and the model we have. The most important thing is diversification, and history sometimes repeats itself, sometimes it doesn't. We just use it as a reference. In the present time, what I want everyone to understand, you have to make decisions on the chart on daily basis, weekly basis, monthly basis, according to what the trend is telling you and what the technicals are telling you. Don't be biased to one side. So let the chart present itself to you. Remember to forget the past, because what we did in the past doesn't have to happen in the future. Be objective in assessing the current data that's in front of you on the chart. Put your egos to the side. What I mean by it, don't be opinionated that that something has to happen in order to get a price action to the upside or downside because you have an opinion. Just trade what's given to you. You have to assess every entry, the risk first before you enter a position. Understand the maximum gain and maximum loss you're going to have to get a reward. Remain flexible. Flexible is similar to steel. We can be flexible, but if you hit that steel too hard, it's going to bend and eventually crack, and get distorted. Fluid doesn't have a status. It's actually similar to, there's no structure on it, there's no shape to it. It can be moved around. So be fluid with the market, not flexible. And open wide to a range of outcomes. So remember, what you see, act on it fast. Don't be wrong, and money will come to you. Okay? Let's break it down from the Thursday action. And I have here the ETFs like I showed you. Just for the fun of it, I combined the three instruments without the small cap. Here I combined the SPX, but I gave a couple of different scenarios in case of a push-up or in case of a drawdown of a 5%, a 2% gain, or an 11% drawdown. The most important thing, because there was a shift in leadership from Thursday's sell-off to Friday's rally. What can we learn from history? This action was putting all the indices, the futures, the ES, the Nasdaq 100, the Russell, and the Dow. We have created an annual high for the week, the month, and the year of 2021. We had a shift down. We created a cup and handle, and we lifted higher and broke the prior Wednesday, Tuesday, and Monday's high. So let's assess this step by step. We can see here I have the ES, the Nasdaq, and the Dow without the Russell. This is the weekly chart on the indices, and I have put those ovals here. Every time we have a rally, we get a sharp sell-off. But in this area here, what happened, we consolidated. We had the February, March drop, then we continued high. And you can see this weekly hammer. We got a weekly hammer reversal on the combo of the three. If we shift this to a 45 days, I want you to understand, we were in consolidation. We fell off in June. Then we rallied back up. Then we consolidated here. We looked up. Then we started, shifting. We had an ABC. I don't use Elliott waves, but you can see the sell-off, a higher We had a higher low from the prior one, then we had a lower one from the prior low. Then we broke those 3, 4 highs here, which were flat in that consolidation. We have a looked above. Does this mean it's going to continue? Possibility. So have an open mind for either side. And if you noticed in the prior weeks when we were going higher in the last 2 weeks, the last 4 days, volume has increased about 50% to 40% from the prior 2 weeks range on the consolidation grinding higher. Then the last 4 or 5 days, the volume have increased dramatically on the combination of the four. So in our RSI or momentum indicator still above 50 on the 4 hours, as long as I am not losing that down channel trend since it shifted back up, I'm not biased to being either bearish or bullish. I trade what the market gives us, and we trade in the direction of the moves. I hope this was helpful. Let's go to the small cap first by itself, and we'll use the RTY to see where the ranges were. I have the monthly fib for June, high and low. We looked below the June low, then we eventually reversed in a wedge. We broke the 18 SMA. We came back to the 50% monthly Fibonacci. But the weekly fib, if I zoom in here, we have cleared. If I anchor my Monday through Friday the Feb, I have cleared the 61, the 50, and I'm sitting above the 38.2 on the weekly bar. And my machine had grabbed the resistance and support, and we are testing the 61.8 because it took the prior week's Friday high instead of the Monday, Sunday night action. Let's now take a look at the Nasdaq. So there was a big shift in small cap, or you can look at the IWM. I'm just going to flip flop between them so you guys can see the shift in the price action that the small cap gained a 2.1%. Let's go now take a look at the YM, the Dow Jones Industrial Average. We have a similar situation in the Dow when we fell down in June. Then we rallied back up. On the reset, we retested the 38, but we missed the 50% monthly Fibonacci. Then we reversed back on the weekly chart. You can see it. And we pushed eventually higher than the prior week. We have this area here, 1, 2. I don't know if you're going to consider this 3. This is the 4. I won't consider this a 3. I consider these two are 1, 2. This is a 3, and we are coming to retest the prior high. If this is going to continue, we look in the Dow Jones Industrial Average for the fib extensions and the prior breakdown of these two channels to the backside up. If we get reversal or we end up losing this area, we're not biased to either side. We're going to trade what the chart gives us in case it does a head and shoulder on this right. If you consider this is the shoulder, this is the head of it. Does this create a shoulder, or do we break up and continue higher? And this would be the bigger shoulder. This is the head of it. And is this the shoulder, which looked a little bit lower than the prior one here? So now let's take a look at the Nasdaq. You can use the DIA for the Dow. Let's take a look at the NQ or NDX or the QQQ. The Nasdaq, as we can see, we have been grinding in the last month, continuing high. This was the prior high in June. We grinded up, we looked above, then we fell back down on Thursday, and eventually we leveled off at a little bit below the zero line on the monthly fib, or the 100% of the monthly high. We fell into it, created a wedge. We are in an open cone. Then we pushed high. We didn't visit all the gaps in the overnight. I still have that one there. We have a couple of VPOCs that we never tested, which is fine. We created a rounded bottom of which is similar to a V-shaped 2 days range and push higher. If this is considered on Wednesday, look above and fail, and if we cannot clear this area, then you look for the backside of the 38 and the 50 simple moving average, or the 61.8, which is the 38.2 fib on the charts. So this will act as support in the 18 SMA. If not, it will be the 50. If it breaks up, you look for the other side of the fence on the charts. Let's take a look at now the ES, which is the E-mini contract. And the E-mini contract has made an annual high. This was the monthly high. Let's zoom down first to the monthly. We can see that the monthly June low was here. and the high was up here. We were grinding higher. We can zoom in here. And I just want you to recognize that the volume was lower. This is a gap in the overnight action. This is another one here, has not been visited, okay? So since this area, you can count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days or 9 days, volume was low. It eventually, in the last 4 days, the volume has spiked between 40 to 50%. You can use an envelope for the volume instead of looking at the candle close or at the high and low of it. You look at the volume on an envelope to recognize where your volume, how much it has increased. Like here when we dropped, the increase here on that reset and refiguring, rebalancing the portfolios has shifted the volume a little higher in the S&P 500 or SPY or the SPX. If I zoom in this area from the monthly high, we can see we looked down, we created a higher high from the prior ones. You can see 1, 2, 3. We fell below the lower low, which was the low here. On Thursday, we fell. We reversed on an overnight double bottom. U-turn, looked up, created a small shoulder, and eventually broke the prior week's 50%, the weekly fib on the chart, and that was off to the races and clearing the prior 3 highs, 1, 2, 3, and eventually we looked higher. Does this mean we can continue? Possibility. If things do change, you look for the backside of the 38 and the 50% Fibonacci. And if we continue higher, you look for the upside of this target on the S&P 500. Let's take a look at now CL, crude oil. We'll do the same thing with it. And let's zoom down on crude oil. I didn't anchor some of my fibs due to the fact because I want some of this to be done manually with everyone, and everybody will understand what we're looking for. If we're going to go to a 90-day 4-hour chart, you can see, oh, that's not CL. Oops, I put Colgate. Oops, CL. That's Colgate. Okay, my bad. No, where did the fib go? Okay, that was Colgate. Okay, my error. Okay, from low to high, we know that the monthly fib was here. We came back down, retested the 61.8 to perfection. Eventually, U-turned in a wedge. You can see this is a wedge. You can draw a channel, and it created a universal U-turn back to the 23%. This is the monthly fib from the high and low. We retested that area, and at the same time, the weekly high, since we looked above the monthly June high, we looked up and we failed. We are retesting the 61.8 or the 38.2. It depends how you draw it. If you draw from top to bottom or bottom to top, these numbers will be flipped. If you're trading to the downside, you look for the 38, 50, 61 for support. And if you're trading from the bottom, you look for the 38, 50, 61 to the top. This is why the machine has 61. We closed right above it by a hairline. As you can see, the candle is 63 cents. The fib is 74.60. If this cannot hold the 50 and the 18 simple moving average, we have a Houston, a problem. And we cannot clear this candle because this major big candle that broke us down, the distance we reverse is 61. Does this mean we can continue? Possibility. If it doesn't, have an open mind to keeping an eye on crude oil. Let's take a look at GC. And we'll do the same thing in GC. As we can see, when we're consolidating in this area for about a week and a half, we fell below this area and eventually consolidated, reversed, and broke this area. We've been retesting this section here, 1, 2, 3, 4, 5. If we can clear this candle here, I think this body won't have an effect because the volume was high. You see on the dump, we had 1, 2, 3 days volume increasing. Then eventually it slowed down. On this volume dump, there was actually accumulation, okay, on the monthly fib because you hit the monthly low. Then it eventually reversed back to the 38.2. The 1820, 1825 is very important to continue higher and clear the 200 SMA. You have to keep an open mind what the dollar is doing, what interest rates are doing, and the Japanese and the Aussie in relationship to gold to see if the mining companies and the currency exchanges are giving gold an opportunity to continue. And I consider it part of a hedging position in case the market goes in opposite direction. At least you have something you can turn to if our Federal Reserve Board keep depleting our dollar. Let's take a look at the dollar and the VIX, the XY, and we can see that the dollar from last week's rally, from that Thursday, Wednesday, we had the June low and high. We looked above and we coming back to the 23. If this area cannot hold in the 116 simple moving average, you look for the backside of the breakout, this area, which is the 38.2, and eventually the 55th. If this U turns and goes back up, it can continue with the market. These people are looking for a safe haven in the stock market due to the fact the currencies in the international world, they look as a dollar as something they can turn to in case something is going wrong. After the COVID, the situation after the COVID, the market has done very well. Everybody was afraid of it. The Federal Reserve Board pumped more money than we needed, and we are holding interest rates low. Let's take a look at the VIX slash VX, or you can look at the VIX. I'm using the VX, the future one, or the UVXY, or the VXX for the banking and the small cap. We can see that we created lower highs every time. You can see those lows, but we created a higher low from here. If I take these out of the question and I just look at June and the price action in July, we had a spike on that push up because there was a, you know, sentiment changing contract. You can see it. Then we fell back in. We consolidated in the same area. Everybody was looking to go a little lower. Unfortunately, we U-turned back up. We created a higher low. We retested the 61, which is similar to the 38.2. We missed the 23 or the 78%, and I connected those two channels. I do have a linear regression channel going down this way. If I connect it, we can see that we are in a linear regression down channel, and I'll put it up here for everyone so they can see it. You can connect it to this one, and these two are very identical from the gap. You can see it. We retested the gap. Then when we looked up, you have a center of gravity here, which is 50. We below the 50. We're around the 38 or 61.8. If things are going to change in the VIX and these 3 points hold and the U turns back up, pay attention to the technicals. This is why I brought the V slash VX into play, or I can look at the VIX for the ETF. I'll put it up for a second because I don't have much fibs on it, and I'm going to go to a 3-year weekly to show you how it looks like in relationship to the COVID-19 gap spike up, and every time we had lower highs from the top and lower lows. Does this mean it's going to continue lower? Possibly. If this snaps back, pay attention to the charts. Let's go back to the 45-day range, and we'll start working with Bitcoin, BTC. I'll just go do it a little quick. I've been referencing these areas every week on my Twitter account, giving you guys levels. We know the monthly fib was the high and low from the drop was down here in the 28,000. This is our annual high. If I put my mouse, you can see it. It's from March 14 and June 1st, 2021, the high and low, which I have, because the overnight action, I always look at the 31st of the month. So when we look at from March, from January till December, we anchor those fibs, and that's my annual high. And I can show you that the high and low for the month, where it is, we know the 61.8 has not been able to be cleared. We've tested the 50% a couple of times. We tested it once here, twice here. We tried it again here on the same day. Next day, we retested here and we fell back down. This is a very important area. I'm going to zoom in this area. to show you where the levels are. This is my weekly high and my weekly fib low from Sunday night. Remember, we had the long week. We had that little gap here. It looked up, eventually fell down. Went back to the 50, that 35, 150 has not been able to clear it. If BTC has to clear this, this is considered a rounded bottom, and it found support between 1, 2, 3, and clears the run back to the upper wedge and clears the 116, then the 200 and the 61.8, it's going to be off to the races. If it creates a lower linear regression channel, because I can grab this one here and I'll anchor it this way, you can see there's a channel here in the charts. But if I go a little bit more sharper, I'll grab this one here with this level here. This is my best scenario. If BTC clears this area, you look for the upside extension. If it stays in this down linear regression channel and it loses the open cone middle of the center of gravity around the 32,500, you look for the backside of the opposite channel, which is down here. I hope this was helpful. Let's take a look at Ethereum, ETH, and we can see ETH. Let's zoom down. And I've been mentioned, oops, I don't have it anchored correctly. Oops, not a biggie. We'll fix it. We can see since it had that 4,000 range, it fell down. And since June, Ethereum fell down. It's in a linear regression up channel, but it's been ranging to the 50, coming back to the bottom, going to the top, coming back below the 50, going back to the top on the gap last week, and eventually retesting the consolidation of these candles. Let's just zoom in here. We know that was the consolidation 1, 2, 3, breakout. Retest the breakout once more time, gave you a chance to be in it, and it pushed up on a gap up. Came, retested the consolidation of these candles, looked above, tried to get to the 61.8, has not been able to clear it. Then eventually on Thursday, Friday, Wednesday, Thursday, fell down. Wednesday, it found support, which is in this consolidation that I consider this 1, 2 breakout, 3 test. This is the fourth one. If this is going to hold and push, it's great. If it doesn't, don't be biased because you still have a down channel from up the top. It can retest the backside here and the prior breakout of the retest of consolidation. So have an open mind to either side. I trade what's given to me on the chart with no biased opinion. My RSI is below 50. If it goes above 50 and continue, you trade it to the upside. Hope that is helpful. Let's take a look at some ETFs. I'll go do the EIF. This is the bond market, the short-term maturity for the 7-10-year notes. We can see that we are consolidating. On Friday Wednesday was the high. Thursday, Friday, we retested a little bit lower of the breakout of the monthly Fibonacci. I didn't anchor the weeklies. We don't have to. We can look at a couple of other ones which are in the I'm going to look at the one other one other than the TLT so you guys can have a better understanding what we're looking for. And we're going to look at the FDN. And you can see that the internet sector has been doing well after the reversal. It had a small glitch and continuing higher. We're going to do another one, which is XAL, the airline companies. Oops. XAL. That's the XAL. I'm having a lot of, this doesn't look good this way. Okay, let's put it on a 90-day instead of 4-hour. Let's do daily, 1 year, push OK. We can see on the daily that the airline are starting to look at the prior breakout. This is 1, 2, and 3. It's retesting almost this high. We missed the 200 SMA on the daily. We have to have an open mind if things are going back online and people are going back to work, traveling, having summer breaks, and all that all together. And if this is going to be happening, pay attention to the airline companies. We looked at the internet, and we're going to look one more. It's the FTEC, which is the Fidelity, and we can see that uh, the info technology has broke the prior highs. If I connect these dots here, we are in a linear regression up channel. And if I connect these ones here, we can connect those two. Let's just do it just for the fun of it, so you guys can see it. Yeah, I'm doing a little bit of ETFs to help you guys because I'm more of a, on the short term, I'm a future trader, but on an equity swing trading retirement accounts, I trade a little differently. So this is why I'm putting some different ideas in ETFs to show you the trend. We can look at the TLT. It's in a similar situation. We have a rounded bottom. This is a small cup of it, and we are continuing. If we break this area, it's going to tell you that interest rates are okay, but we had a glitch on Friday, and the market reversed a little bit because they are paying attention to interest rates. You can look at the inverse of the TLT. It's the TBT, and you can see it right here. Okay, that's the inverse. And let's take a look at the NYA. This is the broad market of the New York Stock Composite Index. We know where our annual high is. I don't have all the monthly and the weekly fibs. Remember, we had the January, the February lows, the March lows, and we had, the continuation high, and then we had the May reset. And since we had the May reset, June looked down to the prior May reset. We continued higher, and this gave us a reversal bar continuation up from the Thursday reset. Does this mean that the overall market is rebalancing their sectors and going into different structure, whether it's going to be the tech sector, consumer products, staple companies, small cap, indices, value play in small cap, or small cap that became eventually to mid cap and they moved to large cap? So pay attention to the small cap sector. I'll do the XLF. I'll do a couple of ETFs, just run them fast. XLK, that's the technology. XLV, that's the healthcare. XLE, XLP. You can see that we are starting to shift back. So you can look at those different sectors to help you out, know where we are. If I look at the AAPL, I'm just going to do a couple of stocks. I don't want to go too many. We have an annual high on Apple. The most important thing that Apple holds to 138.80. If it does lose the 142, pay attention to it because it can come back and get you. Okay, let's take a look at Amazon because it had an annual high, pushed higher out of the consolidation. A lot of people are looking to take a short on it, take a stab at it. I didn't anchor the weekly fibs. I know where the weekly fib high and low is. So we can draw that together, and that way you guys can have an idea where the weekly Fibonacci's are for the week. I can anchor my fib. I know to zoom in here a little bit more. This is 1, 2, 3, 4, 5. This was Friday. Oh, this is the daily. We got to go to 4 hours. I'm sorry. My fault. This is the Monday's action. You can see this was Friday, correct? That's on 7, 2. We got to go to 7, 4, 7, 5, 7, 2, 7, 5. This is the low. We anchor this fib to this high. We're going to pay attention to the 36,660. If it is lost, we look back to the backside of the 61, then eventually the bottom of the breakout. If this is wedging, it's going to hold and comes back to this channel, holds the 18 and continues higher, you look for the extensions to the upside. I hope this is helping. Let's take a look at Google. It was in a similar situation, came back a little bit more. Got to zoom in and zoom out. The machine went on toss a little bit differently. This was a consolidation for a couple of weeks. Then eventually we broke up. We got an island reversal. This is a very important island. If Google cannot hold, you look for the backside. Let's take a look at NFLX because NFL sold off. 2, then it's consolidated to fill the gap, and it's trying to hold above the monthly fib. Let's see what it does. And we'll do last one, Tesla. And I'll go back to the ES to show you the profile. Tesla had, I consider this like a double top, or a couple of days tops, if you consider this is rounded top, and it fell back down. Very important that Tesla, in order to run, has to clear the 50 SMA and the 61.8. If Tesla cannot clear that area, you look for the backside of the channel because it is in a wedge, in a consolidation wedge, but it's still in an up channel. If I zoom down, we can see that it is up in a linear regression channel, and I have a symmetrical triangle. We looked above a couple of times, couldn't clear it, and we fell down. I am not biased to any side. Trade what you see. Let's go back to ES and we'll finalize it with this one, /ES. And what I want to do, go to the style. We're going to go to the, instead of the standard, we're going to go to monkey bars. This is showing you 3 months daily. This is the value area high. This is the value area low. This is where the most contracts are. This is where the most time spent. You can see they almost very similar. It eventually shifted higher. So if you look at the same thing, wick up, wick down, it had a bigger formation at the bottom on the monthly. The time spent was lower than the POC. Then eventually we reversed. The time spent still lower, but the POC, developing POC, is higher. We have 3 different time distributions here. You can see it. There's 1, there's 2, there's 3, and the POC value area high and value area lower here. This is a very important area for the ES to hold on the monthly. Let's go now, since this is developing, hasn't finished. We're going to go to time frame. We're going to do, oh, that's 3 days. Sorry, this is 3 days. Oh my God, I'm doing 3 days. I thought that was daily. My fault. Let's go down to 20 days, and we're going to go 1. There we go. I want to go to the left a little bit. This was the consolidation. You can see some of these POCs have not been revisited since this area. Every time we have a grinded higher, grinded higher, grinded higher. These are virgin control points. And from here on, we have not revisited these areas lower. So we looked up, we continued, then we consolidated a little bit. We looked up, we fell down, and eventually we broke up. This is where our POC is, the sentiment. This is the time where the sentiment is. So if I zoom into those 5 days, what I want to do is pay attention if this is going to continue, or do we come back? Because if you consider this 1, 2, 3, 4, the POCs are very similar. If you combine all this week into one, the POC is here and the time spent is in that range. So we are not biased to either side. We have to make sure that the shift in the market keeps us intact so we don't end up trading on the wrong side of the chart. So we consolidated, we fell down, and we continued higher. The most important thing is to keep an eye on the weekly fib from high to low, that we do not lose the 4330 or the 4300, 4305. That's very important because this was a very nice U-turn, looking in the overnight low, rallying, breaking above the 1823.31, and eventually breaking the prior highs and closing up here. This is your close. This is your open. This is a nice move up, similar in the Nasdaq. Hope you enjoyed your weekend. I look forward to seeing you on Monday. If you like this video, give me 2 thumbs up and let people know that this weekly video is for free. Over and